Fresh highs and stinky breath. Yes, the S&P 500 made all-time highs today. All-time is, a long time. That's what we're going to talk about on today's Stock Market Brief Show, which we're only looking at about 4 slides today on today's show. So make sure to hit that thumbs up. We're going to keep it right to the point. Yeah, so today we saw a close near the lows of day. If the market wants to pull in a little bit, remember, we just had 10 consecutive days to the upside. We were working on 11, but it came in a little bit, and it came in at a very specific level, that 5,300. That was the level that we had discussed on prior episodes, that it's going to be really hard to escape that level. But we tried for the corner, but we got taken back down at about 53.25, which was a level of resistance today. Now, if we start breaking through these a little bit more cleanly, there was a note from Nomura that they said upside gamma exposure is, you must watch this, because if they start getting through this 5,300 pretty cleanly, traders then could start reaching out further to say 5,400 and more and cause even more of a move to the upside. Now, as the market was moving to the upside today, it started getting pretty far outside of its weekly expected move, and the higher probability is always coming back to and around the weekly expected move. Tomorrow we have an option expiration, so a lot of this gamma is going to roll off. It's going to be interesting to see how that plays in. We close near the lows of today. Going into tomorrow's trading session, the daily expected move is 526.11, and the upper is 531.27. Today we didn't tag one of the expected moves, but we closed well within it. We're still above a rising 5-day moving average, and we're still in positive gamma territory, so dealers look to buy the dip and sell the rip. This is where liquidity goes up and volatility typically goes down. So what did I mean by poor breath? Well, poor breath can be shown in this specific chart. Now, I'm using a couple of things. I'm using the BPSPX, which is the bullish percent index. I'm not showing that very clearly here. That's the gray shaded area. And it's roughly right at around 70, so a pretty decent reading there, which means about 70% of the stocks in the S&P 500 are on buy signals, buy signals, based off of the tic-tac-toe charts, right? Point and figure charts. But what I like to point out every once in a while is the RSI on the BPSPX when it gets into an oversold condition, right? And I like to look mainly for divergences. For example, you can go back way over to here where you saw the bullish percent reading reaching to another low, but the RSI was given a positive reading, and that actually marked a bottom move there in the S&P 500, which is this black line. Now, as this is moving up at pretty much a straight shot, we're starting to get now into that overbought condition on the BP chart. But that's not the only thing. I want to look at this line down here. This is the percent of stocks above the 20-day moving average, and this is the percent of stocks above the 50-day. And what it's telling us is there's 76% of the stocks in the S&P 500 that are above its 20-day moving average. And you can see we got very low. And what happened when we get pretty extended to the downside? Well, you can see potential rip your face off rallies. Same thing that happened over here, right? We went low, we put in a higher low where the market, right? So the internals were strengthening here, but the market was going down, giving us a signal that we may very well start to bounce. Even this high to this high right here, right, is showing us a negative divergence as the market kept pressing higher, and things can stay overbought for obviously quite some time. And then in the shorter term right here, what you'll see is as we're hitting all-time highs, it's not doing so with the breadth of the market relative, obviously looking at the 20-day moving average. And then you want to see something a little bit more dramatic, take a look at the 50-day moving average. The percent of stocks in the S&P 500 above that is only 62%. So as the market's pressing all-time highs, it's doing so with less names behind it. Actually, you can go back not only just here, but here and then even here, and you can see from those points we put in high, and a higher high as this entire thing has been diverging on this move higher. And when there's poor breadth, it doesn't mean necessarily that the market's going to come in and hard and fast and crash and do all of that, but it is still worth noting that there's going to be fewer names and fewer concentration that the market's focusing in on that's really driving this thing higher. So as we are outside of the weekly expected move, understand that it's always a probability that we trade back in through and around it. And we are in, obviously, above the rising 5-day moving average in positive gamma territory. So as it stands right now, for me personally, I'm looking for very intricate setups, being very tactical in the approach of these markets. Things have gotten far and they've gotten fast. So now I'm just trying to be patient and wait for things to digest, maybe come into the 5-day moving average and see what happens after that point. It wouldn't be more bearish. I wouldn't get really bearish until we start getting below the gamma flip line and below the 5-day moving average where it starts actually declining. And it's just not doing so as it stands. That's all I got for you. See you later.